Hola mi gente, welcome back to the channel. My name is Sean. This is We Are Investing, a channel that's dedicated in investing and personal finance. What we're going to be talking about on today's video is how to pick a stock for swing trading, how to pick a stock for a trade. Now this video is going to go in pretty good detail. It's probably going to be relatively long, one of my longer videos. So definitely check out the chapters down below if you want to skip through. I'll label each chapter on what we're covering, and if you already know something, then feel free to skip that portion of the video. Also, at any time, if I'm able to provide you value, please consider hitting that subscribe button, ringing that bell, and smashing that like button. I really do appreciate it, and it helps grow the channel. But with that being said, let's hop on over to the video and let's get started. Let's do it. Now, the first thing that I like to consider when picking a stock is what the overall market is doing, because a lot of times stocks are going to trade in the same direction of the overall market. If you don't know what a stock beta is, well, beta is essentially the magnitude that a stock is going to move corresponding to a movement in the major indices. Now, there are three major indices. You have the NASDAQ, you have the Dow, and you have the S&P 500. So me personally, being invested in a lot of tech companies with high beta, I like to look at the NASDAQ 100 most of the time. But I'll also look at the S&P 500 to try to gauge what the overall market is doing. If the overall market is in an uptrend, then stocks are typically going to go up. If the overall market is in a downtrend, then stocks are typically going to go down. If you have a high beta stock, then you're going to see more downside or more upside, usually depending on the direction of the overall market. So knowing what the market is doing before you get into a trade is actually a good thing. And you can time things based on what the market is doing. Now, myself personally, like I said, I like looking at the NASDAQ 100. But no matter what no matter what index you like, or you can look at them all, I like to look at the futures because you get to see the movements that are happening after hours and pre-market hours. It's going to provide you a much cleaner chart in my personal opinion. So what I look at is the MNQ, which are the micro futures for the NASDAQ 100. And this right here is my setup. I like looking at the 1 year, 1 day, the 1 minute chart, the 5-day, 15-minute chart, and the 3-year weekly chart. And you can see that I have a bunch of lines drawn on my chart. There's support and resistance lines. There's moving averages. I'm looking at trend lines. I'm looking at the MACD, the RSI, and then I have a custom study IV rank that I use for stocks when I'm considering trading options. But I definitely think it's important knowing what the overall market is doing before you pick an individual stock to trade. The next thing that I like to do for this market, and probably the market that we are going to be seeing in the foreseeable future, is I like to take a look at the VIX to see what the VIX is doing. The VIX stands for the CBOE Volatility Index. This is a real-time index that represents the market expectations for the relative strength of near-term price changes of the S&P 500 index. Because it is derived from the prices of the S&P 500 with near-term expiration dates, it generates a 30-day forward projection of volatility. Volatility, or how fast prices change, is often seen as a way to gauge market sentiment, and in particular, the degree of fear among market participants. The key takeaway from this is that investors and traders use the VIX to measure the level of risk, fear, or stress in the market when making investment decisions. The reason I want to bring this up because if we take a look at the VIX, this market and the market that I think we're going to have in the future is going to have a VIX range of around 20 to 30. This market has a lot of volatility, but the reason why I like looking at the VIX is because if we're on that lower end in the VIX, and let's say we're at 20 or below 20, then maybe we are due for a pullback, some more fear, and some more volatility. If we're on the higher end, like we are right now, with the VIX sitting at 31.6, and we've had that breakout, well, then maybe it's time for the market to have a reversal. and some bullish activity in the overall market. So the VIX, is a nice tool to add to your tool chest to see what the overall market is doing, maybe try to time a reversal and to help guide you in your trades. So those two things that we mentioned in the video are some of the precursor things that I like to look at before getting into a trade, and it helps me determine what direction of a trade I'm trying to get into. If it's bullish or bearish, if I think it's going to go up or down. In addition to that, when taking a look at individual stocks, there are four additional things that I think are very important and will help you in picking a stock to trade. The first one, and probably the most important one, is momentum. Momentum, 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 momentum. Do not forget that word because it is crucial in swing trading. There are two ways to use momentum as a swing trader. Either momentum is strong, and it is either strong in the upside or downside, meaning the stock has nice momentum and continues to climb up, or the stock has a lot of momentum to the downside and continues to fall. In that case, you would just be following the trend and using momentum as your friend. The momentum is strong, so the likelihood, the probability of that trend remaining is very high. And that way you can just swing the trend. If it's going up, it's going to continue to go up and you make money to the upside. If it's going down with strong momentum, then it just continues to go down and you make money to the downside. Using momentum as your friend, indicating when it's strong and it's going to continue on the path that it is one way to swing trade. The other way to swing trade, and I do this a lot, is to find when momentum has weakened. Having weak momentum is crucial in finding a reversal, and it's crucial for a reversal to actually happen. If momentum continues up and is too strong, well, then you're going to continue down the same path or up the same path. But if momentum starts to weaken, that is when you can have a reversal, and reversals can be extremely lucrative. On your screen right now as an example, a personal example of a stock that we've been trading, TBT. If you take a look at this stock, you can clearly see by these green trend lines that we've had positive momentum and it's been strong. It's been trading in a well-defined channel to the upside and actually broke out of that channel and had a nice move to the upside. In addition, taking a look at some indicators like the MACD and the RSI, you can see, and these are momentum indicators, that they continue higher. So momentum has been picking up on this stock, and that is why we continue to see moves to the upside. In this kind of trade, we're trading the trend. We're using momentum as our friend, and we are following the strong momentum to the upside. Taking a look at the other type of trade, seeing a reversal, this is also a trade that we've gotten into, and this is a bearish trade on the XLU because we saw that momentum was starting to fade. If you take a look at the actual chart, you can see that we set a double top. If we zoom back out and we take a look what's happening, we set a double top, but we also saw a drop in the RSI. The RSI is just an indicator of momentum. The higher the number, the higher the momentum. So if you start to see the RSI fall, that means that momentum is starting to weaken as well. This also corresponded to a crossover on the MACD, a negative histogram, also indicating that we are seeing weakening momentum in XLU, and it was a good time to get into a bearish trade. That's an example of trying to identify when momentum is dying and you could see a reversal. And as you can see here, there is a nice move to the downside. It can be quite volatile and it can be quite lucrative finding reversals. But reversals are very hard to find because sometimes it might seem like momentum is dying, but it really isn't. It's just taking a quick breather and it can continue even higher. If you take a look back at our trade on the TBT, there have been times where we hit that upper trend. We hit a pretty much an overbought signal on the RSI. We pulled back. You might think, oh, momentum is fading. Let's get into a bearish trade, but it actually picks up again. It's important to look at the long-term trend. And if you take a look at the RSI, anything above 50 is an upward trend. So if we put the cursor right at 50, you can definitely see from at this point forward, we've been in a pretty consistent upward trend on this stock, and that is indicated on the chart as well. The next thing that's very important for identifying a stock to trade are key levels on the charts. Using the chart as your guide to identify potential opportunities in a stock. We're looking for price structure, and there are some main things that we look at. I'm showing you the MNQ because I just have a ton of stuff drawn on this chart because I look at it all the time. So it's a good example for me to provide to you to show you what I'm doing on charts. The main things that we're looking at are support and resistance lines, and I'm looking at them on the daily chart, the weekly chart, the monthly chart, and I actually have some color coding that I apply so that I can quickly identify where that support or resistance comes from. We're also looking at trend lines, and we use the same color coding for the trend lines as well. Trend lines are great for identifying when a stock is about to pull back or when a stock is about to reverse if it continues in trend. Using momentum and combining it with price structure is probably the most powerful duo when it comes to swing trading. You want to see an instance where momentum is fading or getting stronger at a key price, something that you identified on the chart. So what we do is we draw horizontal lines, support and resistance lines. If it corresponds to the weekly chart, the line color is white because W for weekly. If it corresponds to a green line, then it's on the daily chart. Then it's from the daily chart because daily corresponds to dollar and the dollar is green. If it corresponds to a red or maroon chart, then it's from the monthly chart, monthly for maroon. The order of importance is the daily is the least important because it has the least amount of weight to it. The weekly is important or better than the daily. I shouldn't say more important, but it's a stronger support or resistance. And then the monthly is the strongest support or resistance that we can have. We also like to take a look at the 4-hour chart to confirm some candles on what's happening because sometimes you might see some things in the 4-hour chart that won't show up on the daily chart yet. While we're looking at charts, let me tell you the next thing that's important when swing trading, and those are your favorite indicators. So for me, the indicators are just used to try to confirm that first point we were talking about, momentum. So the indicators that I use are the MACD and the RSI. And like I said earlier in this video, I'm not going to go into deep detail about the MACD and the RSI, but overall, it's a way to gauge momentum. And I have videos on how to use both of these. You can check out the Stock Market for Beginners playlist down below where I dive into the MACD and the RSI. And then the last thing before picking a stock to trade is volume. You don't want to pick a stock that has no volume because then you're not going to be able to buy or sell the stock easily and you're not going to be able to get the price that you want or a fair price. So volume is extremely important. You need to have all of the other criteria, but if there's no volume in that stock, don't even waste the time in doing all the technical analysis. Just skip the stock because no volume is no good for trading. And this applies to options trading as well. You need to take a look at volume and open interest for the strikes that you're looking at to buy or sell. So a quick recap on some of the things that I'm looking at on the chart before picking a stock to swing trade. The first thing is momentum. The next thing is the chart, price action, support and resistance lines, and trend lines. Then we're using indicators to help gauge momentum, and we need to have volume. So now that we have all of that clear and we know what we're looking for, how do we find stocks to trade? What process do I go through to identify potential trading opportunities? So what I like to use is scanners, and I'll add stocks after I look at my scanner to a watch list of potential trade opportunities and keep an eye on them. Typically what I'm doing is with the scanner, I'm looking for stocks that I think fit the bill, fit the criteria. I'll add them to a personal watch list until they get to that area where I'm ready to get into a trade. I'll watch a stock for a couple weeks before I actually enter into a trade. Let the stock come to you. You don't want to go chasing the stock. Now, I have a video on how to set up the scanners, but we have three main scanners that we use every single day at the end of the day to try to look at some stocks to trade in the short-term future. We're looking at that swing trading rips, the swing trading dips, and the 200-day moving average scanner. Now, I actually don't use this screen on Thinkorswim. What I do is I have all of my charts linked. And if I expand this, you can see that I have watch list down here. Well, if I go to my watch list and I go to my rips, and the way that I actually do this, I can't show you in real detail here, but I will detach this watch list, have it on another screen, detach the live news, put it on that same screen. I'll split the watch list and the news there. And then all I have to do is pick the watch list. So we'll do swing trading rips, let it load, and then I have it sorted by volume. And now I can just click on the stock. My charts are going to be updated. So for instance, NKTX today was up 8.99%. It has volume of 15 million. And the reason why it's on this chart or this scanner is because we had a spike in the RSI and it's above 60. Now, this is a huge spike. It's not an indication to me that momentum is strong. This might just be a quick blip in the actual stock price. So this isn't something that I would trade. But essentially what I will do is go through this list, take a look at all of these stocks to see if there's one that I actually like to get into a trade. And right now, there's not really ones that I personally know of. I like trading bigger names, companies that I actually know, but we'll go to the swing trading dips and take a look at potential reversals. So right here we have Palantir. It has huge volume of 54 million, and you can see that the stock is falling. Well, I will look to see if Palantir can form a double bottom here. And if it can form a double bottom, then we also have a divergence on the RSI because the RSI was much lower here, it was much lower here, and we can actually get a double bottom with a lower RSI, or I should say a higher RSI because it's not so oversold, and that would be a sign of a divergence. But you want to avoid trading into earnings. You don't want to hold stocks through earnings because that can be crucial. For instance, if we take a look at Netflix, this was a mega cap tech stock, and we take a look at what this stock did, you can see that it had earnings. Before earnings, it was trading at $340, and then after earnings, it was trading at around $200. A massive, massive drop following earnings. That is one of the reasons why, especially in this environment, you do not hold swing trades through earnings. Going back to our list, our swing trading dips is going to pick us stocks that are low on the RSI, indicating that momentum is strong to the downside. So you can either continue to play a bearish trade or you can look for a reversal. In the case of Palantir, we're looking at a potential reversal because we have a double bottom and we have weaker momentum as indicated on the RSI. Another scanner that I like to use to try to pick stocks is I will use the 200-day moving average scanner. So stocks that are at or around their 200-day moving average, I'll look at those stocks because the 200-day moving average could be a nice support. But when I use this, I want to see stocks that that have respected the 200-day moving average in the past. So just coincidentally, the first stock that pulled up on this scanner was Pfizer. And if we take a look at this chart, you can see that the stock bounced off its 200-day moving average here back in October. It dipped below the 200-day moving average, but not by a ton. And right now, it's at its 200-day moving average. It just crossed above its 200-day moving average. But yet again, we have earnings on the 3rd of May, just a couple days away. So this isn't a stock that I would like to get into now, but maybe it could be a potential trade to the upside after earnings if we hold above that 200-day moving average. Because if the 200-day moving average acts like it has in the past, then we can see a move to the upside. In addition, when I take a look at the stock, before I actually get into a trade, I would do all of my charting. So just like the 200-day moving average, we also have this trend line here. So I draw the trend line that was drawn on the daily chart. I'll add that, I'll make it green, and there you go. I have my trend line on the daily chart for Pfizer. We can also draw some horizontal lines at support and resistance levels. So we can draw one here. We can convert that over to green because it's corresponding to a daily candle. We can change it to this function here, that line style. Now I'm just duplicating this drawing and putting it at other levels. I definitely like this level here as a resistance because we touched it 3 times. I can also duplicate it and put it as support lines like the one we had right here. And what else I can do is I can take a look at the weekly candle and see if there's any lines that I would like to draw on the weekly candle. So actually what I'm seeing here on the weekly candle, if I draw it, put the line right here. So this bottom here actually corresponds to this top here. So we have 2 points, and that is corresponding to the weekly candle. So I'm going to make it white, change the line style, and there you go. I have a support line based off of the weekly chart. Now, by doing that, I can take a look at the stock, see when we get to key levels, and if we have some kind of indication from momentum, we can get into a swing trade. That is basically my process in trying to find stocks to trade. All right, let's go through the process once more. I have those watch lists off to a different screen and I can just click through different stocks and the charts are going to update. And I think this is the best way for me to go through an example of how I go through the process of identifying a trade. So obviously we talked about a lot of the things that I'm looking for. We went over the scanners that I'm using. And now we're going to go through the scanners and see if there's a stock that I think might be a good potential opportunity for a swing trade. So we're looking at the swing trading dips scanner right now. So a lot of the stocks that are going to show up on the scanner right now are going to be low on the RSI. They're probably pulling back. So the process is very simple. Once we have everything set up and we have our workstation where we have all of our charts and all of our moving averages shown and the indicators that we want, we can go through the process of charting to try to identify key levels and where we would get into a trade. What we're doing right now is we're taking a look at Palantir and we're going to start drawing some support and resistance lines on the daily. So they're going to be green and they're going to be dashed. So we're going to create one line, we're going to have it green and we're going to have it dashed. After that, we're just going to duplicate that line and draw some more support and resistance lines. So we definitely have one right here. We dropped and then we used that as another resistance before we had a big fall. Then we've had this massive fall. We have another resistance, which actually looks like a double top right around here. Now, it doesn't have to be exact. We didn't really touch this line here, but we went just a little bit above it here. But this, to me, is a double top. Remember, support and resistance lines, they're not really lines. They're more like zones. So that's a zone right here. But I'm going to get rid of that, and we're going to continue down this process. We're going to duplicate this line, and then we're going to bring it down here as well, where we have this stop right here. Now we can zoom in, and you can see that this, I'm actually going to get precise. I'm going to put it right at the wick. So this price corresponds to $10.25. I'm actually going to make that on the dot. It already is. The value is 10.25. So what we're looking at right here with this stock, if we zoom back out, is we have a double top and we're heading towards this bottom. So we could potentially create a double bottom, or this is an indication with this double top that buyers couldn't pass through, that buyers couldn't break through this price. Sellers regain control, and we'll see if buyers can step back in at this bottom here. So for me personally, what I would like to see is past earnings that we hold this double bottom. We have bullish candles indicating that yes, there is some green activity happening. There is some kind of consolidation and buyers are starting to step in. And we also have indicators on the MACD and the RSI that momentum's not as strong as it was before, meaning that yes, there is a divergence and there's a good chance that we see a reversal. You don't want to just get into it because it's at a key level. You kind of want to use multiple things before getting into a swing trade. All right, here we go, taking a look at another stock, and I already did the charting. This is one that I'm potentially eyeing for a trade, and it's very similar to what's happening with Palantir. So in this case, right now, as you can see with a white line, we're at a white support, which is weekly support. We have earnings coming up on May 3rd as well. And with today being April 27th, we don't want to get into a trade until after earnings. If we do get into a trade, we want to close out the position before we actually head into the print. But what we're looking at here are key support and resistance lines. And as you can see here by this white line, we have a support that is represented on the weekly chart at $85. So all I'm looking for now is some kind of indication that we got some bullish activity happening with this stock. If we zoom in and we take a look at the candles, you can see that we had one green candle. This might be the start of some bullish activity. Now the candle has a very small body, meaning that open and close were relatively close to each other. The open price is close to what the close price. The close price is slightly above the open price, and that's why it's a green candle. We can also take a look at the 100-day 4-hour chart and see what's happening. Here you can see we have more consolidation. So this is a better indicator that we are consolidating, and maybe that $85 price is actually going to act as a support. What we can then do is look at this consolidation range and see if we can break above it. So the high price on this candle is $88. I'm going to add a blue line at $88, and that is going to give me a sign that yes, we have been trending higher, as you can see by the 5-day 15-minute chart. These charts are going to give me a look at what's happening in a closer picture to see if we are reversing. Now, my personal style of investing is to swing trade in positions that I will hold for a couple of weeks, usually. So with earnings being on May 3rd, that doesn't really give me enough time. So this is a position that I'm actually just going to have to keep on my watch list to see what's happening. So there you have it. That is basically my process in trying to identify stocks to trade. Now, me personally, I'm doing all of that charting. I'm trying to identify if a stock's going to continue on upwards, downwards, if it's going to reverse. And then I'll take a look at the options chain and I'll try to identify lucrative opportunities, opportunities that have a good risk to reward ratio. But that's a little bit more complicated. That's something that I'm going to have to save for a different video. I'll make that video in the upcoming weeks, and then I'll put that video in the stock market for beginners playlist. So definitely hit that subscribe button, ring that bell, and smash that like button if you want to be notified when I upload that video. Now, if you have any questions on my process or if you have any questions in general, then definitely comment down below in the comment section. You can also join the Patreon. It's $5 a month. It gives you access to a private Discord server. It is on that Discord server where I identify the entire community on trades that I'm eyeing up, and I will notify the entire community whenever I buy or sell into a position. Also, feel free to comment down below if you have any video topic suggestions that you would like me to cover in future videos. I highly look forward to seeing what you have to say in the comment section. But outside of that, that pretty much wraps it up for this video. I thank you so much for your time. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.